running. They're on fan, not on cold. Experimenting to see if the timer works. I don't know. Well, do you know where to turn it off from where?
By the.
This one.
Is it the same?
End of the passage. No, this is
Oh, okay. All right.
You lost to leave.
Nope.
Shake.
Just like that.
Are you kidding us? This is the new, and we got the new look. Did you? Hmm? Take you in arms. Okay, let's Just make sure that's off. Okay, guys, I'm closing up here. Closing up. Can I close up? Okay.
So something camera is cutting your hair. Is it okay?
There's a little cutting my head off. You're right.
There's a
So,
camera.
yeah, which camera are we
Your
talking
hair.
about? That one. Okay. Maybe that one can be pushed up a little. There we go. And
Is
a little
it
bit,
better?
little bit this way. This way, a little bit this way, a little bit this way, a little bit more. Perfect. Oh, now we've got the window. That's okay. I think the window's fine. Yeah. Thanks, Didi. Right, so let's put this baby on. Hello. Okay, let's just get hello. Okay, I can switch off all the other. Is this? No, that's not mine. That's not mine. There. I've now got. Okay, I'm just going to change the. Thanks, Didi. That's brilliant. Thank you. Okay, we'll take 3 and 1, 1 and 3. There we go. Okay. Right. Let's have a look. What is interesting here? You know. Okay, before you. Oh, hello. There we have Charlie. There is something. There's something going on here. I am on one part. Yeah. I'm on one camera. Which camera? You see the Riverside and the YouTube cameras are different. Now that's possible. Come look. Come look. Come look. You'll see what I mean. Just have a look here and you'll see. Okay, it's a little delayed. Okay, watch now. Okay, let's just put that up a little bit. There we go. Okay, so that camera is coming from there. Fine, all good. Do you see what that camera is seeing?
No, that's delayed.
No, not true, but look at the angle.
So it's the same, it's just this one's boxed you, but it's.
Is it the same? Exactly
Yeah,
the same
exactly
camera. It's just coming from a different.
See,
Okay.
this one's square, this one's rectangle.
Okay,
So it's
all right. Okay, sorry, apologies. Okay, all good. I'll live. I know. Okay. Thought it was I was going a little bit skew or something. Swift. Okay. Ah, good thinking. Come, Clive.
Oh, God.
Clive is the marketing
You did,
guy.
you
know
did,
what's
you
going
did
on.
the ironing of the curtain, so let me just move that. Just in the angle.
Okay. And then you can move that micro. That you can move the camera across a bit. If we're using that the fixed camera.
Yeah.
And I can actually move. I'm quite happy to move across a bit here as well. Okay, more stew, more. Oh, it's got it back different. Okay.
Clive, it's back to front.
No, but it comes out fine. Look,
Is it fine there?
on, it's fine on YouTube. How funny is that?
What's that?
It's back. It's back to okay. A little bit back. Backwards. A little, oh, I see. You're just trying to do the YouTube thing. Okay.
How's that?
I like that.
Is that cool?
Wow.
So what can I?
Okay.
Yeah, that's fine. That looks good there.
It
That's
looks
all fine.
perfect. Isn't that funny? It goes on
inverse on
Riverside.
Riverside,
It's
yeah.
upside down, but on YouTube it's perfect. And that's the thing is, Stu. It's got it's a little bit too far over, I think. It's just a little bit too far over. Okay.
It's a bit of a delay.
Okay, I'm sure that'll be fine.
Just where's David?
Okay, right. So I see there are 10 people who are with us on YouTube, ours at 10 people, you can put your questions down here. So there's different things. Okay, so okay, right. Questions. Yeah. Please. There we go. Okay, so you can write your questions there. You see, we're looking quite professional now here at BizNews. So we've got our okay, we've got just turn this up. Do a little bit of testing, sorry. Okay. Okay. Flash. Okay. Great. Oh, thanks. Thank you. Okay, I've got 2 minutes to go.
I love the banner, Clive.
Jeanette loves the banner, Clive. Hello, Faan. Can you hear me?
Yes. Yeah, there you go. Hello, Alec. How are you?
If this here from yours, I think you should be loud and clear.
Yeah. Can you hear me? I can hear you well.
Excellent. Lovely. Lovely. Looking forward to the chat, man.
Yeah. It's been long overdue. I know we've tried.
We have indeed. Fantastic. Okay, so you're now going out on YouTube as well, which is, we've got a virtual studio on YouTube, so we can see you. We're going to go in about 2 minutes. Ooh, I nearly got my coffee knocked over. In about 2 minutes, we'll be on air. What happens is that we send a little link to Fine Music Radio because it goes free to air there. Obviously, it's now on YouTube and on our BizNews.com, BizNewsRadio.com, and then you'll hear something. It just alerts them to the fact that we're coming on. So it's
perfect.
Brilliant. We'll talk in just a couple of minutes.
Sure.
Yeah. Okay, just to remind you, look here at YouTube, there we go. Got all my papers in front of me. Got a really nice show coming up for you, everybody on YouTube. We've got Faan van der Walt, you can see him on camera right now. He's the founder of WeBuyCars. We will also be talking to Neal Froneman tonight. Neal is the chief executive of Sibanye. So we've got Sibanye. So we've got, there's Neal coming in too. Nice and early. How's it, Neal? There we go.
Hello, Alec.
How are you?
Yeah,
good to
good.
see you.
Same.
Okay, we're about to link up now. So I'll just put you guys on mute for the moment. And then that's Faan van der Walt there. So we'll talk to him first, then to you, Neal. Should have quite a lot of fun in the next half hour. Right.
All right, good stuff. Hello, Faan.
Fantastic.
Hi, Neal. How are you?
Okay, standing by. Indeed we do, and what a lovely program we've got coming up for you. David Shapiro, is our guest co-host as always here on a Monday evening. You know, I love talking to entrepreneurs, David, and we've got two of the best in South Africa with us tonight. Faan van der Walt, who I don't think has been on this, no, he hasn't been on this program before, and he's not very high profile, but my goodness, has he built an amazing business. WeBuyCars, Dave, we've been doing enough discussion of WeBuyCars over the last little while.
No, an incredible business. And we'd been watching it from outside. Remember, Naspers tried to get hold of it and weren't allowed to get hold of it because of the online offering. And along came Transaction Capital. And it's only then that we got an insight into the kind of business that they do. And and globally, it's, I watch Carvana, I watch AutoNation, I watch WeBuyCars, and this is a big business today. Massive business.
I want to know from Faan why he sold it so cheap. According to Pitchfillion, he sold it very cheap. But we'll talk about that in a moment. And then you can see on screen as well in our virtual studio, Neal Froneman, who is, I've often said it, South Africa's premier miner. We had the pretender to the throne almost, Neal, last week in Andries van Heerden. But lovely to have you with us tonight, Neal.
Nice to be here, Alec.
So we'll be chatting more about some pretty heavy stuff with Neal Froneman, but that's a big program coming up for the first half. And then in the second half, we're looking at the gold price. So we've got Peter Major and David Melville both giving us some insights into their views on where the gold price is going. It's interesting to see, David Shapiro, if you go back in history, we are now very close to getting to the all-time record. That was around $2,000 an ounce. We're through $1,900 an ounce now. And suddenly as gold has come back to life again. So when gold does well, the rand does well, South Africans, even though gold isn't that important in our country anymore, seem to be terribly excited by the fact that the gold price is higher. And it really is an opportunity, once again, to have a little bit of fun by buying into those gold stocks.
Yeah, we've got Neal here. He's a platinum man. He used to be a gold man in his former life, but he's now platinum.
No, he's hedging his bets now. Yeah, he went into gold then.
And look, he's even changed his background. He's no longer in Fort Lauderdale or where, and Neal no longer in Florida.
Popo, I'm working from my farm, so just as good.
Okay. Well, and the connectivity in Limpopo is great. But
Alec,
David, yep,
I think a lot's happening there. I just to having a go at Neal, but it's wonderful to see how platinum has come right, and I'm still very bullish for mining this year. For all forms of mining, and there are a lot of stories around what's happening in that area, not only in gold and platinum, but in so many other areas as well.
And we're also going to be speaking to Neal about how we're going to convert, or how South Africa is going to convert into clean energy, because the way things are going, Sibanye was up by 4% today, so it's also a nice time to be talking with him. But if you look into the future, if South Africa isn't mining with clean energy, Neal reckons there could be some problems. But all of that's coming up in quite a program we've got for you tonight. First up in our program tonight is Faan van der Walt. Well, Faan, lovely having you on the BizNews Power Hour. And I was just having a look through your background ahead of this program. We can learn anything from LinkedIn nowadays. And I see that you started off as a teacher. So how does one go from a teacher to becoming a billionaire with this incredible business that you and your brother Dirk have built? Did you actually teach at any point in time before moving into business?
Hi, Alec. Yes, I did. I did about a 5-year more or less stint of teaching after qualifying. Firstly, 2 years in South Africa at a primary school called Laerskool Menlo Park. And from there, my wife and I, once we got married, went to the UK and we taught there for another 2 years. So in those years, and I'm talking the years 99 and 2000, you could earn quite a bit through teaching in the UK. It was about 10 rand to the pound back then, and you could earn about 110 pounds per day. And we decided that we will go abroad and do this for the 2-year period, but try and live off one person's salary, which we managed to do by being very frugal and staying in a very humble flatlet that we rented. And
where did you teach in the UK? Fine. What
in Essex, in the east of London, in a
Essex.
town called Ilford and Romford, Barking, Dagenham, those areas.
And the only good thing that come out of Essex is, of course, West Ham United. But outside of that, David, I mean, Essex is rough. Eh? That's not the happiest.
Yeah.
We know Ilford, Dagenham, we know all those places.
It's not Surrey.
That's where. Well, West Ham, don't you remember they were the Vauxhall? I think they were always sponsored by Vauxhall, wasn't it? Am I not right? Fun.
Dagenham
Right.
Roses. Yeah. Did you ever go and watch West Ham? Fine.
No. I went to a couple of games of Tottenham with a friend of mine. He's a big supporter there, but never had the chance to watch one of those. But yeah, it was a really good move for us. We learned a lot. It opened my eyes, certainly. Being brought up very conservatively in South Africa, it was a leap of faith we took. And I remember the day when I went to resign at in the South African school where I taught, and the headmaster said, "You're making the biggest mistake of your life. You shouldn't do this. You've just grown into becoming a proper teacher. We're ready to give you more responsibility." And I said, "Well, sorry, I'm going." And he said, "Well, you'll regret it later." And that served as motivation just to prove them all wrong. And even whilst teaching in the UK, I also bought and sold cars. It was a sort of like a childhood passion. We were brought up, fairly not poor, but we had limited resources, and never had a car of my own. I had to buy and sell and trade a bit to get my own car eventually while studying. And I bought and sold, and I found little bargains in the newspapers and the online, sorry, not the online platforms, and the smalls. The online came later. But I learned a lot, and my brother Dirk, who partnered with me later on when we got back from the UK, he's very different to me. He's more of a creative dreamer, and he came up with the idea to rather advertise and capture that audience before they put their car on the market, just so that you've got that mandate to pursue that vehicle before everybody else pursues that vehicle, and that helped us a lot in the early days.
Did you learn much from the UK system? And I ask this because what WeBuyCars does in South Africa is very similar to what quite a few guys are doing in the UK, and it's a very crowded space. My own car, when we were there for 3 years, we bought a car, we sold it. When we left, it was very, very simple. Somebody came along, double-checked it. They gave me a quote beforehand, very much like what you do, sending people to the customer's home. Did you pick up many tips from them?
No, in fact, in those years, it didn't exist in the UK. We saw these big car supermarkets whilst we were there, but there weren't any car buying services out there. We started the WeBuyCars website in 2001, and there's this wonderful thing I'm sure you know called the Wayback Machine, and you can go and look at all websites and what they look like over time. And we're probably the oldest. So it might be like the Wright brothers who came up with an airplane, but someone else at the same time did the same thing. But we didn't learn this from anyone. We just developed the idea as we went along and improved it consistently. So it was interesting to go and visit the UK players in the years later. So yeah, we did visit conferences there. And some of these big groups now who specialize, like We Buy Any Car, they're really big. Beast, British car auctioneers, the Mannheims, the Cox Automotives, those players. We can still learn, and they grew, to the extent that I think We Buy Any Cars will buy around 30,000 or 36,000 cars a month in that market. So it's become really, really big. Currently, we strive when we buy more or less. I think today, if I look here, we've bought about 8,000 vehicles this month.
Where do you put them?
We have warehouses across the country. In fact, we opened one today in Germiston, the latest one, the 8th one, started operating today. And each of these warehouses can house more or less between 500 and 1,200 vehicles. So that's where they're housed. And we're lucky in the fact that we turn our stock really quick. So within 24, 25 days, everything that we buy on average will get sold. So
And
yeah, it's a quick turnover.
What do you do to make sure that when David Shapiro comes in to buy his next Mini, because he's a Mini fiend, he's going to make it's not going to be badly damaged, or the person wouldn't have driven it badly? Is there anything you can do? Because I guess that's the big question when one buys a second-hand car.
Correct. Yeah, I think the industry has a bad reputation, and we and many other players in this space are trying to change the perception the public have about the used car dealership. But there are still a long way to go. So what we've tried is, and what we're doing currently, is to have a inspection done on the vehicle through an independent party. So every single vehicle that we purchase, we'll let DEKRA, and for those who don't know, it's part of the old AA. They bought all the old AA testing stations. So these people are able to do a comprehensive roadworthy test on the vehicle, and that information gets displayed on our website. Now, in many cases, it'll count in our favor, where you get the peace of mind, you're buying a pristine, good quality vehicle. But then at the same time, some vehicles do have faults, and we display that just to be transparent. The buyer knows, yes, I'm getting this vehicle at a very low price, but I got to keep in mind there are some repairs that needs to be done to this vehicle. What we also do is we sell a large percentage of our cars to vehicle dealers. Around 40% that goes to various dealers ranging in size from OEMs to the independent dealer in the street.
I want to bring Neal in here because both of you guys are disruptors. You have been very disruptive in the second-hand car market and have sold on most of your business to Transaction Capital, which we'll get to in a moment. Neal, from your side, you've been very disruptive in the mining industry, going where angels feared to tread. And I think from Faan's perspective as well, you've got a school teacher who's made a little bit of money by going overseas and working hard there, comes back into second-hand cars. So again, a market that not, as I say, angels fear to tread. What is it, do you think, that that motivates you? And we start with you, Neal, to disrupt. And I'd love to hear where Faan's motivation comes from.
Yeah. So interestingly, I put myself through university also buying and selling second-hand cars. And the common denominator, I think, is the entrepreneurial flair. And I had many of my friends at a young age saying, you've got an entrepreneurial flair. I don't think I really knew what it meant at that time. But being a disruptor, I think you got to think out of the box. You got to see the opportunity. Many times you get told why it can't be done. You don't mix gold and PGMs and so on. But if you understand your markets and your business properly, you just got to think outside the box, be entrepreneurial, see the opportunity. And it's always about creating value. I mean, that is the primary focus. It's not being different for the sake of being different. It's creating more value than your competitor. That's what sets you apart.
Faan?
Yeah, absolutely. The essence of being is to never be satisfied with the situation, and having the ability to see room for improvement in everything you do. So we every day when we leave here at work, we leave this place different than what we found in the morning. And changes overnight for the better. So we have these goals and we work through people. I get a real kick out of trying something new, whether we fail or succeed, but at least trying something and seeing the result. And we developed a good gut feel. We usually it usually works, but it's become a science, and it's fascinating, how we price cars, the data sets we've developed, what we can do, with the bulk of the data we have, the scale that we have achieved. Now you can start doing smart things, in pricing vehicles, working out commission structures for buyers, selling your vehicles, in different ways through various channels. It's always fascinating.
Some other parallels between the two of you. You sit down and do deals. Well, you've done a deal, Faan, by selling your business to Transaction Capital. And Neal, you do the deals by buying businesses. What tips have you got? Negotiation tips. I once read a book by Mark McCormack, whose negotiation tip was make sure that both parties actually win something. Don't leave the room with both sides, with the guy that you're negotiating against, feeling like he's lost too much. But the second thing he said is have a bottom line. Don't deviate from that bottom line. If that's what you want, that's what you should stick with. What are your negotiating tips, Neal? Starting with you.
Yeah, so I think first of all, spot on in terms of understanding the value of what you're trying to buy. And there's a lot of perceptions that you get driven by deal mania. That's absolute rubbish. I think anyone that does this on behalf of shareholders needs to know exactly what the value is, what you're prepared to go to, and at that point pull out if necessary. And that's why doing deals in public is so difficult. Getting them done privately, where you say no many more times than you say yes, is very important. I always believe that both parties should walk away equally unhappy. Not equally happy, equally unhappy.
Were you unhappy, Faan, after your deal with Transaction Capital?
No, we are happy. But Neal, I get what you're saying. It's got to be tough, and these were really tough negotiations for us. But at the end of the day, it's not only about the price. It's partnering with the right people. So my brother and I, as founders, are still remaining shareholders to the extent of 25.1% once this deal gets approved by the regulatory authorities, which might take a while. But for us, we see it as a knee up, into a bigger market, into creating more value, through getting this partner on board. So the price is one thing. Partnering with the right people certainly also very important.
Final question for you, Faan, and then we'll move on to Neal's area of focus for tonight. What would you advise young South Africans who are thinking of starting their own business? What are you must have been asked this question many times by either your kids or your kids' friends, or just youngsters who admire what you've achieved?
Yeah, I can keep you busy for an hour on that topic, but I guess the most important thing is to stay focused. I think we get distracted too soon, and people want this instant reward. This business, although people only recognize it now and started noticing it over the last few years, it's been 20 years. It's been 20 years of grinding where for the first half, my brother and I did everything. We were the buyers of WeBuyCars. I visited every single suburb, my car, every day, and went into people's homes and learned the hard way. I remember, one day a guy phoned me and I went there and I ended up in Johnny Clegg's house and I bought his VW Combi. That was a great experience. And so there are so many stories like that, helping people, in a situation that they're unfamiliar with. And you must enjoy that. If you don't enjoy what you do, you don't have a passion for it, then, you're dead in the water. So have a passion for it and be patient and stay absolutely focused on what you do.
Overnight sensations take 20 years to achieve. Faan van der Walt, the co-founder of WeBuyCars. Neal, what would you suggest to young people, entrepreneurs, potential entrepreneurs?
Yeah, look, it's to me, Faan said it all. Hey, it's hard work. There's very few overnight success stories. It's hard work and it's focus. And you know, all of those elements we apply in our business as we run it today. Role clarity and focus of each executive is critical to the success of the business.
Neal, we asked you to come onto the show not to talk entrepreneurship, but thank you very much for sharing that with us. But because of the concerns that you have about where South Africa is heading into the future in the sale of minerals, if we don't get in line with what's going around in the rest of the world with green energy, your contention is that we might find out that nobody wants to buy the stuff that we're producing. Just give us some background on where this comes from, presumably your interactions with international investment community.
Yes, absolutely, Alec. And you would have seen that in the last couple of years, ESG issues have really become prominent. And in fact, I would say that if you don't pass the ESG criteria that is set out, you know, internationally, or have high ESG standards, you're not even going to be on the playing field in the future. So ESG issues have become really principal issues. The advent of COVID-19 has accelerated the views of the world around climate change, health issues, and you've seen many technologies, if I could call it that, accelerated to the point that you know, battery electric vehicles were, you know, they were always there, but I think there's been a huge uptick in the adoption or the planning to adopt those vehicles. I must tell you, I still don't know where all the metals are going to come from, but nevertheless, the world is embarking on very stringent environmental protocols, and COVID seemed to wake everybody up to that. It's all about carbon and carbon neutrality and climate change. Of course, the social issues are important, but more difficult to measure. So right now, we see many letters being written by prominent CEOs and chairmen of investment funds, almost dictating that if you want us to be continued invested in you, you will start disclosing your carbon profile. You will commit to carbon neutrality in a respectable amount of time. And you know, when you start coupling that with the other assurance processes around gold and PGMs, I can see a situation developing where if you don't produce green metals, whether it's copper, nickel, gold, or platinum, your end users will not be allowed to adopt them. I mean, cobalt is one example where artisanal mining, child labor, whatever you want to call it, in the DRC has resulted in cobalt being very difficult to buy. So that's where it comes from. And I think if you just look out a bit into the future, if you are not seen to be responsible, especially from an environmental and a carbon point of view, you're going to find it very difficult to sell your products, because the person on the other side has to take account of that.
So it's a little bit like blood diamonds, coal energy. Now, your story is that you've been trying to do your own energy for, looking back into the files on the various publications, for almost 10 years. So did you foresee this, or has it been just concerns about what Eskom is, the difficulties they're going through, and you need to be independent in your energy production?
Yeah, it was more the latter, Alec. It was more about needing some form of alternative energy supply that is reliable, especially in ultra deep level mining. and our 150 megawatt project that you're referring to was identified to provide some of that load. We're an energy intensive user, so we cannot provide all of it through renewable energy. So that's where it started. But clearly, I think reliability of supply is one thing, but your carbon profile is very quickly becoming just as important, and in the future, I think more important.
So if Eskom is delivering most of its electricity through coal with Kusile and Medupi, hopefully one day they do start producing at the levels to which they were designed, that if you are using that energy, if you're off-taking that energy, is there a threat then that you might not be able to sell your products in the global market?
Absolutely. It's coal-fired. It'll be linked to you as a business. And in that regard, one of the things Eskom has to do is also clean up its acts, if I could call it that. And that is possible. You can still produce coal-fired power, but you got to reduce the emissions. You can't produce it the way we're producing it at the moment. So if you're fortunate enough to get power from a hydro plant or a uranium plant, a nuclear power plant, you're one step ahead. So all of these things are going to be very important from a growth perspective of companies. It's going to become a second part of your analysis, is not just the value that you may create from a commercial perspective, but what is this going to do to your carbon profile? If it's going to make it worse, well, you're going to have to up the discount factor in terms of your net present value and internal rates of return and so on.
So as far as the story that's in the media now is concerned, from your perspective, is that you want to produce clean energy yourself, but you're being prevented from doing so by the government. What's that story?
Yeah, you know, and it's what can I say? It's a characteristic of our current government that everything is about control. So it's all politics, no economics. There's a cap or a limit of 10 megawatts. We want to build our first 50 megawatt unit. We have to get special permissions for that. We have applied, and of course there are delays. So in my view, we're mowing the lawn while the country is burning down, and it's because of this absolute need by government to control everything to suit the political agenda.
But can't you sit down with somebody and say, look, we put in this 50 megawatt plant, we pay for it, you're going to earn money through taxes, so actually you'll be able to employ more people in the country. It's a virtuous circle. Is that side of things just not being understood?
Yeah, it's as I say, Alec, in my view, it's about control, political control instead of economics. You and I get the economics with in a blink. But for whatever ideological or political reason, these things there's an attempt to control them at government level or at ministerial level.
If you're bringing in these new plants, will they be accepted by the ESG, or the environmental, social, and governance criteria that international investors are now wanting? In other words, if you produce your platinum and your gold through this kind of a power plant, would you in the future have no problem in selling it?
Yeah, listen, you would have to, if it was the only initiative that you embarked on, you would have to install very significant amounts of capacity. We've committed to get to carbon neutrality by 2040. We've got an internal target of 2030. And that's a combination of renewable energy, both solar power, photovoltaic means, plus wind. But it's also about addressing the emissions of diesel vehicles and so on. but it also includes the ultra deep level gold mines coming to the end of their lives, and they are very significant energy consumers of coal-fired power. So if we are put under pressure, if we had 30 years of life in the ultra deep level space, then of course we would be making decisions about probably shutting some of those down earlier than we would have to.
Neal Froneman is the chief executive of Sibanye Stillwater, and also in this half of the program, you heard from Faan van der Walt, the founder of WeBuyCars. Well, it's the top of the hour, and that means it's time for us to pick up with our colleague, Jackie Cameron, in the flash briefing or the news headlines of the day.
South Africa is forecast to have one of the slowest economic recoveries in the world. It is unlikely to recover before 2025, says the Organization for Economic Cooperation and Development. The organization blames slow vaccine rollout and low consumer spending. Global economic growth is expected to reach 5.8% this year, with the US, UK, India, and China outpacing this worldwide average. When it comes to betting on higher borrowing costs in the developing world, some investors may be getting ahead of themselves, says Bloomberg. In markets from South Africa to South Korea, traders are penciling in a faster pace of interest rate hikes than what economists say is currently warranted based on the inflation outlook. Almost all of them are overpricing tightening, says an analyst with Alliance Bernstein in New York. South Africa's central bank governor has entered the fray over pupil diversity at schools. Lesetja Kganyago joined a group of parents in an anti-racism protest at Cornwall Hill College, a private school attended by his daughter. The school is near Pretoria. Kganyago told broadcaster ENCA that the school has got to consciously go out and look for black teachers to give our children pride, to actually look and know that there are black people who are excelling in the education sphere. Cornwall Hill College charges annual fees of as much as 94,000 rand, which puts it out of the reach of most South Africans. South Africa has tightened up measures aimed at curbing the spread of COVID-19. President Cyril Ramaphosa has extended a nighttime curfew, which reduces business hours for bars and restaurants, and has reduced the permissible size of public gatherings to contain the spread of the coronavirus. A widely anticipated tightening of curbs on alcohol sales did not materialize. Ramaphosa said in a televised address that further restrictions are necessary to ensure that health facilities are not overwhelmed. And that was your BizNews Flash Briefing. I'm Jackie Cameron for BizNews. For more on those and the other big stories of the day, visit biznewsradio.com.
Thanks, Jackie. And, well, in just a moment, we'll be hearing from Nadia Swart on today's markets.
BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movement in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes.
And today is BrightRock's 10th birthday, 31st of May 2011. We're going to have the three co-founders in our studio tomorrow night, so that should be lots of fun. But Nadia, what did the market do today?
All right, so Alec, the all-share index was up today at 67,964. Impala Platinum was up by 5% to 251 Rand per share. Northern Platinum was up by 5% to 233 Rand per share. Netcare was down by 3.5% to 14 Rand 85 per share. And Lighthouse Capital was down by 3.5% to 7 Rand 90 per share. In the currency markets, the Rand was flat against all the major currencies to 13 Rand 75 to the dollar, 19 Rand 53 to the pound, and 16 Rand 81 to the euro. Gold is higher at $1,906 an ounce. Brent crude is steady at $69.65 a barrel. And the premier cryptocurrency will put you back 507,000 Rand a Bitcoin.
So, David, a little lower on the Bitcoin, a little higher on gold. Maybe there's a little swing there. You know, we're now seeing that we're going back to traditional inflation hedges.
I think so, and it's very interesting to see the switch coming back to gold. Gold's been edging up a little bit, but I avoid making any comments on what is known now. It's not Bitcoins anymore, it's tokens, and it's a market that's beyond my comprehension. I'm still struggling to understand gold, but I think I've got a better feel for that than I have got for Bitcoin. but a very good market today, particularly in platinum shares. So, they led the market. Remember, America and UK were closed today, but still nice showing on both those markets.
Yeah, Nadia, I think you were saying that it was really a day for the miners.
Yeah, I mean, Impala Platinum and Northern Platinum were both up by 5%.
Yeah, that's a big move, Dave, in anyone's terms. Although I suppose in the mining board nowadays, who knows?
You got a couple of old timers here in the show, but we're not used to seeing 5% in a day. For us in the olden days, if a market moved 0.5%, that was a really good day. But today, with the kind of algorithm trading and the amount of money that sloshes around from hedge funds and various other high frequency traders, you can see 5 to 10% gains in certain shares in a day. So,
Peter Major, he's talking about you as an old timer. I would take umbrage if I was you. Take it, mind you. I was going to say challenge him to a run up the three peaks, but you never know with David. He might beat you.
I thought I was the oldest timer, not just an old timer. Oldest timer.
Well, it's the wisdom that comes with such experience. We're going to be talking to Dave. We're going to talk to Peter and quiz him in just a moment about the gold price. But outside of those on the market, to see Netcare down 3.5%, is that a delayed reaction to their results last week?
I think so. Look, I still think it's a recovery stock. I still think things are going to get better, but they're still battling COVID. They're still battling, the elective surgery side of their business. People are not coming, people are not doing elective surgeries, and they're still being clogged out by the number of COVID patients. So it's going to take them time before they settle back in. We saw the same from Mediclinic and probably Life Healthcare as well. Hospital groups have been under enormous pressure, and it's a global issue. Even on the drug side, and even on a lot of the companies that make body parts, your knee replacements and your shoulder replacements and hip replacements, have all battled because of the delays to elective surgery. But somewhere along the line, you're going to have those things done. So, I would imagine the results are just a reflection of conditions at the moment.
Part of my daily reading is the Times of London, and they are now talking in the UK of an absolute flood into national health, or the National Health Service, when they're allowed to go back, when the lockdowns end, and that is a consequence of this elective surgery having been postponed for so long. But just on that subject, I've got a couple of friends who participated in marches over the weekend against lockdowns. And they sent videos. There were between 75 and 100,000 people walking in London to say enough of the lockdowns already. Let's be done with them. Let's get back to normal. And that kind of stuff not really getting reported over here. But if you think that when society comes back to normality at some point in time, then all the money that's been thrown in the system or into the system would find a home somewhere, and the economy maybe take a very strong run, and maybe the markets would follow it, Dave?
I think so. I think in the second half of the year, my daughter, who was in New York, who's now in Boston, last night reported that she went for the first time to a graduation party. One of her friends' daughter graduated from Columbia. She said to see 50 people in a room without masks, enjoying themselves and just relaxing, just was something that they haven't seen. It's going to happen. People are going to go out there and spend as confidence returns, and that it's happening in America. It's all over. You saw the Indianapolis 500. There were 150,000 people there. Yeah, it takes 300,000 still. I'm on your side, Alec. I think there's going to be a lot of revenge spending, and people are going to let loose.
Revenge spending. Nadia, have you got that lined up for yourself? Some revenge spending.
Well, I already saw my after lockdown ended. I was just so happy to be saving money, and life started back up. And so I suppose my revenge spending was just like living again.
Okay, and nothing wrong with that. But it is interesting, the BizNews conference, which is scheduled for early September, end August, early September. We were told previously we could take 250, but we didn't market it aggressively because we've got to 100 people already who've booked for that conference. Now it's down to 100. So it's going to be very interesting to see what happens in the next few weeks whether the third wave materializes in the way that it's being projected. I mean, in the numbers, it's like a very low gold price at the moment, not the soaring gold price if you look at the infections. But we've got to get past this period to get back to normality, including the BizNews Investment Conference, where we hope we can really make that available for many more people. Nadia, it was a good one, the one we were at in March.
It was absolutely fantastic. It was the first time I'd actually seen like that many people just being human beings. It was amazing to see.
I think it's the clean air in the Drakensberg that does it.
It must be a part of that, definitely.
Dave, just to finish off with the markets today, your feeling on the currency, because we're going to find out in just a moment what our partners at Treasury One think about that.
If you think that if spending is going to continue, and it's going to continue in those countries that are coming out of lockdown, believe me, I think markets will go up. The rand will hold its course. There's a belief that it's overvalued, and it probably is. But I think under the current conditions, as long as we get strong markets, strong equity markets, I can't see the rand weakening. So, I'm encouraging people to go offshore. I think it's a wonderful time, but don't expect this to suddenly swing in the other way, short of some kind of disaster. But I think it's going to hold its course for the meantime.
This market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes.
Thanks, Dudu, for bringing through the market report. Well, we're going to be talking in just a moment with Peter Major about the gold price. But before we go there, Jackie spoke earlier today with our partners at Treasury One to just carry on with what David had to say about the currency. And here's her report.
This currency focus is proudly brought to you by Treasury One, South Africa's leading treasury solutions company that unlocks financial value for your business. Welcome to this week's Currency Focus. I'm Jackie Cameron for BizNews. Joining me to discuss the strong rand and how big companies that rely on income elsewhere can safeguard profits is Andre Salier, currency strategist at Treasury One.
The rand's still performing extremely well. It's still the best performing emerging market currency. But if you look at commodity prices, then we have seen commodity prices doing relatively well over the week. Inflation fears creeping up throughout the world. And that caused people to take a bit of a flight into gold, supporting the gold price going above the 1900s where we currently are. And also platinum, palladium, and all the others followed suit. Us being a commodity currency, still benefiting from that lovely high prices in commodities.
There are other countries that are also commodity producers. Why is the rand doing better than their currencies?
Well, one of the other advantages that the rand has got is the fact that our interest rates is quite a bit higher than, especially compared to the first world, and compared into the emerging markets, we're one of the better ones in the emerging markets. We've had the COVID-19 vaccination program starting. We had a family meeting last night by Mr. Ramaphosa, where some new measures was imposed, but nothing that really could dampen any growth in the economy, really. It's more requests that's been put to the people of South Africa to actually stay within the lines, wear masks, etc. But the economy still looks as if it's going to come out of the pandemic quite reasonably. Our figures released for growth seems to be on the positive side. So the emerging market space, overall, we're one of the better ones, and we're benefiting from that. Our bond market is also attracting some investment.
Some companies don't like a stronger rand. We saw this week that Standard Bank released results that were disappointing because of the rand strengthening. How does that work, and how do you help your clients who have this problem where they don't actually want a stronger rand?
We must remember that if you earn foreign currency, so Standard Bank has got Standard Bank London, they are in Africa. Standard Bank has got branches and subsidiaries all over the world. So they would be earning money like Investec, like many, many other companies in South Africa who's got earnings in foreign currency. You look at how to hedge yourself with various products in the market, and that's where we assist our customers.
So when we hear a big company like Standard Bank expressing disappointment about their returns because of the rand strengthening. Does this mean that the people in their treasury haven't looked for these opportunities?
Dangerous waters for me to say and speculate what they would have done. I can only comment as to what you can do.
So just in broad brushstrokes, and when an investor looks at companies like this, should they be asking questions about how the company manages their currency risk?
I think that's questions that the shareholders of the company should be doing, yes.
You've been listening to Andre Cillier, currency strategist at Treasury One. I'm Jackie Cameron for BizNews. For the full interview, do visit biznewsradio.com.
You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Well, it's time to pick up now with two of the wise men, and with David makes it three, of course. In our virtual studio, we have Peter Major, as always. Peter, we're going to have David Melville joining us in just a moment on the phone. We would like to find out from you guys about the gold price. David is now focusing completely, David Melville, that is, on gold. You've been checking gold out for pretty much ever.
Oh, sorry.
Oh, sorry. Are you?
I thought you were going to the wisest.
You got
man
a
of the
sleep
bunch.
there, huh? No, I was going to you, Peter. We'll bring David in, and David, can you hear us? David Melville?
Oh,
you can.
David Melville.
Okay. Yeah, David.
Sorry, I'm listening to Jackie. I'm hearing Jackie on the feed. I'm not sure where I should be listening.
Well, you should be listening just
on the
your
YouTube.
phone. Just listen on your phone. Don't worry.
Okay, all right. Okay.
Just switch off the YouTube. You can listen to us now.
All right.
We got Peter Major and David Shapiro in studio, and we've got gold price, which is now through $1,900 an ounce. Pete, just from your perspective, when you have a look at the way the gold price has behaved over the last couple of months, we had that huge peak where it got to $2,000. Then it came back, and it looked like all the fun and games were over. But it may now be on its way again.
It may, Alec, but I'll be surprised if it gets over 2,000. I think it's had a very tight correlation to the dollar. And when the dollar started strengthening, gold started weakening, and the dollar got stronger and stronger. And, when it got down to 1,700, you could see there was resistance there. And then people thought, oh my gosh, is it going to go below that? But I think because all the other commodities are holding up so well, there's no way gold is going to venture very far from them. And it's probably the least volatile and the most stable of the majority of commodities. And I'm talking all the way from coal, oil, copper, definitely the other precious metals, the platinum group metals. And it shows it's old, it's slow, it's steady, it's a real Taurus, it's a real reliable metal, real reliable currency. And people have a lot more fun with Bitcoin, but there's always gold. And yeah, it's not going to collapse when they're printing trillions of dollars in the States alone, and the other countries are trying to match it. And you've got every other commodity known to man shooting up, even uranium starting to move. But I think for gold to get over 2,000, people have to believe there's some kind of crisis that only gold's going to benefit from. And I don't see that happening.
David, your father, Archie Shapiro, was called Mr. Gold. So have the genes passed on to the younger generation?
It was a lot more fun in those days. We had 40 gold mines, and all of them were different. Their lease areas were different. They mined different grades. So there was a different response to any movement in the gold price. And also remember, the gold price in those early stages did nothing, was fixed. It was only much later that was free to trade. And what we as a firm used to do, we used to arbitrage. We would trade gold shares and promote gold shares around London, Paris, Brussels, Switzerland, and that. And so we traded mainly in gold shares. And that. Unfortunately, so many of those brilliant and beautiful companies have all gone. They don't exist. They all mined out. So for me, it was a wonderful period. I still watch it with passion. I still have my dad's button, buy gold. He used to walk around with it. And I'll never forget. It'll still be the fond memories of the markets in those days, but it's so different, nowadays. And I miss I still remember all the mines and all the history around the mines. And I love to go down in the mine. There was no better experience than actually going down on one of those tours in a cage with the miners and having a look around there. So,
tough job down there. But David Melville, we've been following your story over the past few years, and you've now abandoned, maybe forced to abandon life insurance and that area and focusing on gold. What took you there? What took you into this area, given what David's saying, that the best is behind us, and Peter Major's saying, it's not going to get through $2,000. What makes you so excited about the yellow metal?
Well, I want to reiterate a bit of what David Shapiro says. I got to know another Mr. Gold, Peter George, who sadly has left this world 8 years ago. But Peter was very passionate about gold. And I suppose it was that contagiousness about understanding the unconventional economy and coming to understand what real money is, not just paper currency, gold and silver. And I suppose it's rubbed off me, and I've embarked on a sort of a learning journey of trying to understand it and get to know the history a lot better. And then I also had the privilege of going down under with Neal Froneman and Pete Major many years ago when Affleys Gold was the first South African gold mine to be established after 30 years of no new mining. So I suppose all that sparked the interest.
Pete, do you remember that trip down Affleys? I've been down there a couple of, I went down with Neal as well, when it was a uranium mine, though, not a gold mine anymore.
Yeah, my mine's not that great, Dave. I did go to Affleys when Peter Skeet had it, and it was an open pit mine. And I did go down Affleys when it was a uranium mine. I didn't go with Neal. I went with some of his directors, though. But yeah, I don't remember you being on it, but
it was no. We were together because there was a whole group that actually changed its name to Affleys, from Affleys Gold to Gold One, and that was the time when they started mining, and it was active.
We went down didn't we go down
Modderfontein? Yes, that's right.
I remember that.
Yeah.
Going down there. That was a good trip.
But getting back to what you would, maybe David Melville, from your perspective, what would you be advising your clients who are now getting the same enthusiasm that you have about gold? Where would they be putting their investments?
So, Alec, I still think the traditional investment of a Kruger Rand or a silver Kruger Rand are the best investments that anyone can make in South Africa. Kruger Rand started in 1967 when they were just a mere 27 Rand a coin. And today it's now 1,000 times that price. Not because gold is so great, but really probably because gold kept its value, but the Rand has been given such a hiding. So it really is probably the best Rand hedge that we as South Africans can have, investing in real money by buying gold and silver.
I suppose it is an alternative, Mr. Shapiro, to Bitcoin. You're talking about money. Kruger Rands are money as well.
You know what surprised me, and I hate to admit this because I'm an equity man, but and I was quickly trying to get up the chart while talking to you, but on average, maybe in the last 10 years, and I'm gonna have to check my money, you've made on a gold Kruger Rand, which David's talking about, something like 14% per annum, which I think knocks out a lot of competition. I'm going to have to check the numbers, but I did check this some time ago. And I think even I was looking at Afrimat's numbers, over the last 5 years, they're up like 30% per annum or something like that. But I said, and gold's up 9% per annum over the last 5 years, which knocks out retailers, it knocks out financials, it knocks out property by a long way, etc. So although I hate to admit it, it's if you stuck to your Kruger Rand, you've done a lot better than a lot of other equities on the market.
Why do you hate to admit it, David? You should be celebrating
because I haven't got any gold.
Look, if I can add 2 cents in here. Gold has always been more attractive in South Africa than the rest of the world because it's got a shock absorber called the rand that really helps take the knocks out, really takes the volatility out. So, however, the further you go back on a graph, the further back in time you look, it's hard to find 4 years when the rand gold price went down. And even though it did go down in those 4 years, you had maybe a total loss of 20%. Now, how many investments, when the bottom falls out, only fall 20%? And this only happens for 3, maybe 4 years as a record, and then it corrects that very quickly in the 5th year. So I look at how long some of these equity markets go down. They can go down and stay down for years, 10 years, 5 years. But gold is a very safe investment in South Africa. Its long-term average, I think, is about 13%. And that's way above inflation here. And if you want to do what people were doing with Bernie Madoff, the reason he got so many people giving him money, he didn't show great returns, but he showed no volatility. So I think he was only showing 7-8% a year, but he says, hey, borrow money, bond your house at 4 or 5 and gear up because I'm going to give you 8. And boy, he did give 8, he just penciled in 8. Well, gold kind of does that here. It consistently beats inflation. If it does fall down, it doesn't fall very hard. It doesn't stay there very long. Yeah, 13% plus for 70 years in a row. It's not going to stop.
Dead right. I just checked that, Alec. I just went onto a chart now. 20 years, the rand is giving you 13.34% per annum. That's every year, 13.34. So we're spot on, Peter. 20 years. So if you bought a Kruger rand,
and it almost seems to be this inverse or the direct correlation between the gold price goes up, the rand goes up. So if the gold price goes down, the rand weakens as well, which gives you more rands for the lower dollar price. So you really have got that shock absorber. David, David Melville, is that the story that you tell your investors as well?
Yes, indeed. Yeah, no, I just reiterate what Peter Major said. He's really a good specialist and not very good at articulating that. So well done, Pete.
It is an interesting, so would you guys say then it's defensive? If you put your money into Kruger rands, what about gold shares though, Peter?
I'm in the camp that David Shapiro's in, because for hundreds of years, gold went flat. And then even in the 1900s, it went flat for decades. So if you're a good mining engineer, good investment advisor, you made money that way. You said, okay, I know what the gold price is going to be for the next few years. Here's my working costs. If I can control my costs, I can make a profit. If I can get more efficient, hire better engineers, new technology, I'll make a little better margin. If I can increase my production, my fixed costs will be spread over a wider part. And that's how South African gold shares took off. They had to import a good mining engineer from the United States who learned how to do cost control in Alaska on what was the continent's largest low-grade gold mine. And they brought him down to the diamond fields in the 1890s, and then he took him to the gold fields. It's about cost control. And yeah, you could sink another shaft, you could hit another vein, you could merge with somebody. So this is how you made money on a flat gold price. And then when the price went up, well, boy, then you got super dividends, super profits. But we've lost that here. The government has literally attacked our industry. They've destroyed our SOEs. And now the world, like Neal Froneman's saying, even if you got a deep level gold mine, they're going to start nailing you. How do you get your electricity? If you get your electricity green, that's okay. But boy, if you get it through coal, that's not okay. So there's so many negative factors against the equities, especially in this country, that you want to do it through a gold ETF, a Kruger Rand, a coin, something like that. Yeah,
a Barrick?
Equities, they were great.
A Barrick? We have a kind of a South African connection there with Mark Bristow running the place. Would you invest in and you can nowadays, very easy to invest in international stocks. Would that be one that you'd go for to get your opportunity?
For me, because it's too big. How's he going to increase production? How's a new technology or a new deposit going to move the dial on that? And see, South Africa had all these startups. they would launch a gold share, whether it was Western Deep Levers or one of the Vol Reefs. It only started with 1 or 2 shafts, but they told you there's a plan to double the production from these 2 shafts. There's a plan to add another shaft. So they were always adding on something, and they were well managed. They were very well managed. Look, the Brits controlled what, half the planet, a third of the planet for 200 years. They were good managers.
Peter Major from Emergent Asset Managers, David Shapiro from Sasfin, and David Melville, who is an independent financial advisor, bring our program to a close tonight. Seems like the place to put your money is in Kruger Rands, which David Melville's been telling his guys for a while. So I think he gets big thumbs up from our experts. Good to be with you again tonight. We'll be back again, same time, same place tomorrow. Until then, cheerio.
This
You've been listening to the Power Hour, brought to you by the team at BizNews.
Gee, I can't find the off button here.
Thanks, Peter. That was great, man. As always,
Thank
lovely
you, Alec.
talking with you. Hey, good stuff.
You always
And
have
thanks.
good people on this show.
Yeah, it was lovely to have Neal there tonight. I mean, he's
That's a
full
big
value,
surprise.
isn't
I
he,
would have
eh?
been on earlier if I knew you had him.
Yeah, no, he's great value, and I thought Faan van der Walt was also pretty good. You know, guys, from
he
tough
summed it up.
backgrounds, eh? Tough backgrounds, and look at that.
90% of these entrepreneurs, there's at least 10, 15 years that nobody knows about. They busted their gut. They took risks. Even Shuttleworth, and he's a fluke, and he admits it. He still had 5, 6 solid years of hard work, 5, 6 years of work. And that's probably as short a time span as a guy can expect.
Peter, I meant to ask you, and I didn't get the chance, are there gold prospects in South Africa that are undiscovered or underdiscovered, given where the gold price is now in rands? Oh, just lost you. Okay. Okay. Not a problem. We'll get to you next time. Okay. To everybody at YouTube, lovely being with you tonight, and thanks for putting up the those questions. I didn't get around to them. Gold should be considered a long-term investment. Given this, when is the right time to buy gold? Kruger Rands from Wyndham. Wyndham, I think, according to our experts, kind of any time. And then something about the silver beta. Sorry, Henry, we didn't get around to that one. And then Jesse, awesome. So business people always talk about creating value. Can they explain what is value, and do they think the rand will last the next 10 years? Well, if Jesse, certainly from our experts, what they've been saying about the commodity cycle, the rand will certainly last for the next 10 years, given the way that the commodity cycle is going. So that I guess you just got to keep watching what happens to the commodity cycle in the next little while. Creating value, it's adding shareholder value, stakeholder value. Businesses really are in the business of expanding jobs, paying more taxes, paying more dividends to their shareholders. That's what creating value is about. And if you have efficient allocation of capital, well, that's what makes it happen. Okay, well, that's the BizNews Power Hour for tonight. Look forward to being back in your company again tomorrow. Thanks for being with us here on YouTube. It's real cool to see the growing numbers. And thanks for those comments that you sent through tonight. I'll be a little bit more focused on watching what the comments are coming through on my iPad in future, and make sure that we actually pose the questions to the guests while they're still here. Okay, thanks for being with us. I'll be back with you tomorrow at 5:30. Until then, cheers.